This is your ticket to building real financial wealth. We call it the one-page financial plan. And it exists because everybody overcomplicates everything about personal finance and how to actually build real wealth. So today, I'll show you everything on the one-page financial plan and how you can actually do the calculations as well so that you can build one yourself. And if you want a copy of this exact template, you can grab one with the link in the description below. Now we're going to break this up into 5 separate sections: cash flow and net worth, the tax sheet, the investment sheet, the risk analysis, and finish it off with the next 12-month action plan. So grab yourself a drink and let's get started. Section 1, cash flow and net worth. So these are all of the blocks that we'll need for this section. We're going to start with the cash flow block, which requires us to understand 4 separate numbers. Total inflows, which is everything that comes into your accounts like paychecks, interest, and dividends. Total outflows, which is everything that leaves the accounts like groceries, rent, or coffee. Then everything that you're saving already. Maybe that's money that's going into a Roth IRA or a savings account. Now you just subtract the outflows from the inflows to get your total monthly surplus. And this might be the most important part of the plan because it shows us a real number of how much money we have left over at the end of every month to go out and achieve our goals. Now I like to have this pie chart that shows me how much money is being saved, how much is going towards debt, how much I'm using to just live on, and what's left over. Now we'll get into these 4 indicators which give us an overall picture of our current financial health. First is the emergency fund, which you can calculate by taking your non-discretionary items. These are the items that you cannot live without, and multiplying it by 3 to 6 months. Then we need to calculate your total debt rate, which is your total monthly debt payments divided by your total monthly income. Now, a good number to have this at is below 36%, but ideally you would have it under 20%. Now, savings rate, we replace the total monthly debt payments with total monthly savings. Now, ideally, this should be above 25%, but anything above 15% is pretty good. Your burn rate is calculated using total monthly spend divided by total monthly income. This is just a measure of how much money you're actually spending to just live. And your numbers here are going to depend widely on your income range, but here's a chart that you can use to take a look at your income range and what your burn rate should be at. Now, the last item we have is your net worth, and this is simply calculated by taking your assets, which is what you own, minus your liabilities, which is what you owe, and that'll equal your net worth. Now, I like to track this in the beginning of the year, typically like late January, early February, because that's when last year's statements came out, and I track this every single year. Section 2, the tax sheet. Your tax sheet is actually pretty simple and starts with your current year tax estimate. Now, if you're a W-2 employee, this isn't really that important to you. But if you're self-employed, these numbers are extremely important to know. That way you avoid any penalties that the IRS might impose on you. And if you think it's too difficult to calculate this number or you just don't want to deal with the math, a decent rule of thumb is typically between 20 to 30% of your income. The last item on your tax sheet is the tax diversification chart, which is an extremely important concept. Now, there's no real rule of thumb here, but you do want to see diversification across all 3 types of accounts. Your taxable accounts are your savings and brokerage accounts. Tax-free are HSAs and Roth accounts, and tax-deferred are 401ks and IRAs. Section 3, the investment sheet. This section is also very simple and really only consists of 2 parts. The first one is just the total year returns from all of your investment accounts and comparing that to the returns of your benchmark. Now, if you're okay with your returns compared to the benchmark that you've been tracking, then you just move on. But if you want to change your portfolio completely, this is an entirely different topic that you have to go down. So the next thing that you're going to see is your current portfolio allocation compared to what your portfolio allocation is supposed to be. Now, I like to come in here at least once per year and rebalance my current portfolio back to what the original portfolio was supposed to look like. Now, it's extremely important that you understand the consequences of rebalancing a portfolio. If this is for one of your retirement accounts, then you could pretty much rebalance freely because there are no tax consequences of rebalancing within one of those accounts. But if this is for a brokerage account, you need to be extremely careful because you can trigger and will trigger capital gains tax. Section 4, the risk analysis. Starting off with an insurance calculator. This calculator basically just lets us know if there's a need for any life insurance this year. We start by taking your total debt, subtracting out your total savings, then adding in an income replacement. This would be for replacing the income of whoever was in charge of all the preparations for your funeral or whoever was impacted by it the most, typically a spouse. And finally, adding in the extra expenses. Now, this one's typically for final expenses like the cost of the actual funeral. The last item here is the beneficiary check. which basically just confirms that our beneficiaries are listed the way we want them to be listed. Section 5, the next 12 months. This is where we take everything that we just learned about our finances and create a list of action items for the next 12 months. So maybe you determine that you need to apply for a $1 million term policy, rebalance your 401k, and save $10,000 every month for your quarterly tax bill. This is where all of that would go. Now, the very last part of this one-page financial plan is just a list of your goals. This is where your new goals or even the goals that have been being tracked for the past year or so would go. And the whole point is to see if you're on track to complete these goals or not. So that's the entire one-page financial plan, and it shouldn't take you longer than 1 to 2 hours to complete. And if you come back to this video and complete the one-page financial plan every single year, you'll give yourself the highest likelihood of having the most successful year that you can have financially. If you enjoyed this video, please drop a like and don't forget to subscribe. And if you have any ideas or anything that you would want to see on this channel, feel free to drop them in the comments. Until next time, cheers.